Hey, what's going on, guys? Welcome back to Way Up Trading. Today we're going to talk about AMC. AMC basically right now is in a position where it has barreled all the way down from our spring location that we indicated on the last video, last go around here, where everything was looking beautiful, ready to start to make its move back up to the upside. Well, then we got the drop that came absolutely out of nowhere. Unbelievable move to the downside. I mean, the downside has been tremendous ever since breaking back below the $4 mark that we were able to choreograph all the way up to the peak at 436, and then from there it was all downhill. The move was set up. It was beautiful. It was ready to go. We were in the triple bottom with the spring set up. Everything was looking beautiful, but then they dropped the knife. And the knife is taking us all the way down to the $1.90 mark as of today, as of the lows. And is there a possibility that this thing can go even lower? We're gonna take a look at this thing. We're going into reverse split tomorrow on the AMC side of things, 8 thereafter, and then from there the combination of the two. We're gonna see how low this thing can actually get before we start to see some kind of light of day. And a lot of folks are dealing with the mental health side of this thing that is pretty much driving everybody wild and probably driving them to drink. But I urge to stay strong. It always is darkest before dawn. We're gonna look at the chart, see exactly what we're dealing with this from this point forward, how things are looking for a possible return, what the chart says, because that's our greatest weapon in this particular situation, is to watch what the chart is saying, in my opinion. So we're gonna look at that, go over all of that and more right after this.
Short the stock, long the stock.
You look all squeezed out.
Squeezed out. I'm squeezed out.
All right, we're gonna go ahead and pull up the charts real quick on the AMC. We're gonna start off a little bit different than normal. We're gonna look at AMC plus 8 and taking a look here. This is the AMC plus 8 chart on the 12-hour time frame. Now we have to start getting used to looking at the AMC plus 8 chart. I mentioned this on Twitter. That reason being is that now with the combination of the two, we're gonna basically be resetting the clock to where we started off at the preliminary initial offer, well, the initial ex-dividend date of the APE release back on August 22nd of 2022. That's basically where everything started to change. Volume was split between two tickers. It was less concentrated in one local area, which is one of the reasons that we see that there's a disparity between the two types of movements, or the type of movement we should see on the stock as a whole. And volume has been opened back up. Floodgates on volume has been opened back up with the completion of the whole court fiasco with Judge Zern and her finding her pen and all those good things. Now, we're in a situation here where we have to again start looking at the real value, the real setup between two tickers, which is on TradingView. Using TradingView, we're basically taking the AMC chart, adding it using a plus sign with APE, which basically combines the two, combines the volume of both, as well as the price action of both, which brings us to a total combined value, or current value of the stock, at $3.74 at the time of most recent check, which would have been including the after hours move today. Now, this is the new setup. This is going to be a more elongated setup, in my opinion. They are basically going to stretch this thing out a little longer. It's a possibility that it can run a little harder, a little faster. However, things are going to be different now. We're going to have to see how things actually pan out with the changeover from the dollar amount, with the AMC share now being worth a lot more than it was initially. Again, we've been in this position where the price was at $30 or so on, but I'm not exactly sure how we're going to go and gauge, how are we going to gauge the types of movement we'll see in terms of purchasing power, volume, covering, short covering, all of those good things in this area. So we have to assume that this is going to be a longer, more drawn out process. Again, I've been calling for higher share prices now for the end of this year, which I think is still a possibility, but right now it's any man's guess, being that we were dropped down tremendously lower than what we expected to see on both stocks, AMC and APE. APE should have had a run way back when, but I was mentioning on Twitter and also a couple of live streams that being that APE was having a lot of difficulty pulling above 222, that it looked very, very suspicious of a rug pull that was on the way, and that's exactly what we wound up having. So APE is down. Obviously, we had to close somewhere around the 173 mark. AMC roughly touched 190. So basically, both stocks are about neck and neck about where they are priced currently. Again, sitting roughly about around $3.74. Let me move myself out the way real quick here, so just to see a little bit better. This is now the new setup I'm looking at, and basically AMC plus APE. The creek line is going to be represented by this gray smooth moving average that you can see above the downtrend that we have started ever since the inception of APE, all the way down basically where we've touched as automatic rallies. We had a brief break above it when we had the 100% move a few weeks ago. That pushed us. We're just going to call that an up thrust because that was a little bit of a changeover. We should have ran, but obviously they did whatever they needed to do in order to drive price back down. However, this is basically what we're looking at. Preliminary supply took place at the beginning. You got this whole sell off up to about where we got the initial sell climax. That would have been the first test of that $3 mark, what we saw initially on AMC, but we're going to call this $5.35 on the combined chart. Automatic rally was back up to $10, roughly $10, a touch of roughly about $10.45 back in February. This is again combination between AMC and APE. Another push through the smooth moving average, pushed it back up to another run up to about $9.44 before coming back down, rejection, looking like a possible double top for another sell test in phase B. Phase B would have made the second test of the support line. Slight break under, test of the midline, started to build up strength until we got our cross, an up thrust that broke the smooth moving average. You saw a slight squeeze. In our case on AMC, it was 100% squeeze. However, on this chart between the two of them, we went from roughly about 552 up to about 991. Still, this is on both stocks. Value-wise, came up, retested the creek one more time, looking like we're ready to make another initial run through or a second time squeeze. It was then dropped knife down into a shakeout. We looked like we would have possibly been able to catch a standard spring, but this is a high volume shakeout move to the downside that has pushed us all the way down to these depths. And there is possible further downside in this. We're not completely out of the woods yet, in my opinion. It's possible that we can actually see lower lows, roughly or somewhere in the 150 to 135 mark on APE, and then roughly a little bit lower on AMC. I have orders placed roughly about the 130 mark on AMC, would bring the total share price by the time of conversion somewhere around the $26 mark. Now that is not off the table just yet, in my opinion. We still have opportunity for that to happen even prior to the changeover between and conversion. At that point, I'm actually looking for shorts to start getting ready to cover. I don't think an opportunity like this for them to get out and start to exit their positions is going to present itself again. So if they're not covering here, they're not going to cover, bottom line. So right now in this particular setup, high volume being met with a high purchase move and also high volume to be matched, I think they're getting ready for one more dump off before 1 billion shares gets traded purchasing wise to push the stock back up, which would be the terminal shakeout and then buyback. This should be the area where we should start seeing a short covering rally to some degree. High volume trades, high volume purchasing, but that would be it. If they don't start buying back by then, I don't know what else is going to happen here. We're looking at penny stock range. So, I mean, obviously not with the conversion, luckily, but we're looking at low prices, unfortunately. But hopefully this is the area where things start to turn around. And that's what I'm looking at right now. So we are in a shakeout phase here in phase C. Now, if we do get the volume that I'm looking for, I'm talking about 1 billion shares traded. Crazy amount. It's obviously a lot of, we have no proof of it, but naked shorting is, in my opinion, being used here. There's no reason why we should have any supply left on this thing when we've been at very high utilization for several months, maybe even over a year now. Full utilization on the stocks that are available. It's a short threshold list. Unbelievable amount of days. The threshold list is, I believe now, 44 days on the threshold list. No repercussions from anyone. It's just been barreling down completely. And right now it's just like, what else can they do? They've thrown the book at this thing completely. But in my opinion, it's not over. Stock's not dead. Company's improving better and better fundamentally every single day. And there's no justification for this besides what they're doing. However, chart says reversal is coming. In my opinion, we'll start to turn this whole thing around. We'll flip this chart. We'll start making our way back up and start climbing. The accumulation phase will be over. And then the next phase will be the sign of strength phase, which should start to show itself not too long from here, maybe about a 50% move up from this particular point. We'll see. That'll put us somewhere around the $5 or $6 range. Again, AMC plus APE together, which should be somewhere around the $50 range. Once this conversion is completed, we'll start to get some kind of a move here, which would be a backup LPS. And then from there, a sign of strength would push us through. And then we get a markup phase later on, most likely into the middle of next year. A quicker move, in my opinion, is still possible for the end of this year, somewhere around the $80 mark, possibly November, December. We're going to have to see how things play out, but right now it's anybody's guess with this far down of a move. So we're just going to play the charts for what they are. I'm going to go and look at some other things here with what the individual tickers look like, AMC and APE, to see what possibilities can lie there. And I'll also show my thesis as why I believe the possibility of this thing going down further is. and it's based just simply on liquidity. All right, so we're going to revisit the super macro chart on AMC, basically, which has been created since the beginning of AMC's inception, ever since the AMC has been offered on the New York Stock Exchange. And basically what you got here, like we've talked about on a couple other videos in the past, this has been a downward and upward bull channel. The white lines represent the bull channel that we're sitting in on this stock. A descending, super macro descending broadening wedge. In order to differentiate it, I've made it blue and orange with a lighter gray midline. And basically, we had this move basically since AMC started, going back and forth between this particular wedge, descending broadening wedge, finding support on this bull channel, the bottom end, before we got our January squeeze. Crossed and broke above the top side of the descending broadening wedge on the super macro. Got the squeeze after breaking through the midline of the larger bull channel. Brought us all the way to the top, 72 run. Came back down, basically bounced around this midline a few different times before fully breaking down. And in my opinion, now we are now testing and have slightly broken beneath the bottom end of the bull channel. So this should be a very, very key area before we start to reverse. Now you can see slightly, we had two occasions back here before the January squeeze where we broke below this area, which is the bottom of the bull channel, on a couple different touches, 1, 2, 3 touch, break below, and then squeeze. It is possible. We can't say that this is completely off the table. However, we are very, very deep at this point, unless we get some really big volume to actually meet the selling pressure. I mean, that it dwarfs the selling pressure that came in on the last couple of days for a move like this to happen. I'm talking billions of shares, not just a billion. I'm talking billions of shares in order for us to see some type of a move of that nature. It's not impossible, but that's what we'd be needing to see in order for that to happen. And that would literally be short covering rally. But in my opinion, we are in a very crucial location. I mean, buying shares in this particular area or buying whatever at this particular point would have been a great idea. I have orders set for potentially lower because I do have reason to believe that it will come a little bit lower, possibly testing the midline of the larger descending broadening wedge, not exactly touching the bottom end of the more recent descending broadening wedge. So this is where I'm thinking we could possibly see somewhere closer to about $1.30 before coming back out. Now it will be a deep retracement and a full breakout of this bull channel, a large bull channel. And the only reason I'm actually calling that out is because of what I'm seeing liquidity wise. I went and checked out as many ideas for order blocks and where orders and liquidity has been sitting, and this is basically what I've come up with on the stock. This is basically what we got here. These are orders represented as sell and buys. Green obviously is going to represent buying orders and buyers liquidity. Red is all selling pressure. You can see red and blue is all selling pressure. You can see where all the sellers are waiting to pretty much knock it back down if it runs up to these heights, or sellers just looking to exit their position at these locations all the way up to the all-time highs. Green is where the buyers at this point are holding. We got a quick bounce, as you can see, after breaking the bull channel. That's where buyers were stepping in to buy this thing back up. Depending on the selling pressure we see, we can lose this area. I'm still looking up to the idea for testing the midline of this larger descending broadening wedge, which would be another crazy, probably 50% way down before we start to see reversal. Doesn't have to happen, but it just looks like it's a possibility after breaking below this area here of the larger bull channel. Hopefully we don't see that low of a move. I have orders personally set for $1.30 to personally purchase this thing back up, just based upon what I'm seeing here. It is possible to go even lower. These orders are sitting as low as $1.03 for these folks that are sitting comfortably with a $1 average to start to feel a little bit of pain. It's a liquidity test, a liquidity sweep to try to get as many weak hands out of the situation as possible. But I'm going to go remove the lines here just for sake of view. But this is basically what we're looking at. All buyers are sitting in this area. If we start to break below, if we break 150, I'm looking at 137, 138, 139, and then further down as low as about 102. We can start to bounce, turn around, and go back from here back towards the $3 mark, but I think they are going to want to fully distribute this thing all the way to the area we mentioned before. So it's anybody's guess right now what they want to do prior to a reverse split. Are they required to cover with the new custom number and all those changes? Not, in my opinion, not necessarily. However, anything's possible. I'm watching this thing like a hawk, paying as close attention as I possibly can, using whatever potential tools that are out there, or figuring out different tools. But right now we're outside of the realm of TA. We're just strictly in a supply and demand type of environment to really find true price discovery at this point. And it's just straight la-la land right now. So at this point, be prepared for anything, because anything can happen. Now, as far as ape is concerned, ape liquidity wise was rejected from the smooth moving average, which again is the squeeze or creek line, where you start to get squeeze like movements. This is on the 23-hour chart, which will include all after hours moves, and you can see it was slightly pushed above the smooth moving average. The creek line was not able to break past this setup here and was triple top 1, 2, 3 before coming back downwards. It did try to test the lower area of liquidity and buyers to the downside. We did sweep as low as about 160 in pre-market, I believe, today. Very high volume on that push down. It was then met with some buyers that brought it back upwards, but we are now still trying to fill orders within this area between 170 and 180. If 170 fails, I expect us to fully come down towards the 157 mark to as low as about 150, 148 to be exact. So we'll see how things go on. Now, ape has an additional day before it gets changed over in terms of the conversion. So it'll be trading for one more day until it goes through its conversion piece and they are combined. So we're going to keep a look on this thing, but there is room to the downside on ape, but I think AMC is the one that's going to get harder hit. However, it's just crazy to see ape holding its value better than AMC is. It's just unbelievable after ape being in the 60-cent range. It's just crazy. So from a schematic point of view, ape did lose its bull channel that's been sitting in and is basically retested and broke slightly below the last point of support, which is sitting at around the 170 mark. It did break below it quickly, but it was met with some buying pressure to push this thing back up. But like I mentioned before, it does need to hold that area, or else we're looking to go and fill some areas down at the 150 level before I don't know what's going to happen when this thing actually changes over, but we're going to have to see, basically watch things as they play out. But like I said, we're really more concerned at this point. I'm more concerned with watching the AMC plus ape chart until we get one chart to actually pay attention to from now on, and where actual volume can be concentrated on one ticker rather than split amongst the two, so we can really get true price discovery, real true volume, nothing really holding it back. Find out where the market wants to see this actual price or stock price wind up going and take it from there. We should start seeing, as far as the idea for seeing our settlement shares, we should see those coming into our accounts slightly after the 28th of August. As a condition of the settlement, you should receive, for every 7.5 AMC shares you own, you should receive one additional share. So it's very easy to take the number of shares you have divided by 7.5, and then that's basically going to give you your average for how many shares you should receive as dictated by the settlement rules that are actually signed off by the judge on the lawsuit. So keep a lookout for that. It's going to be a crazy time. There's a lot more going on with this stock, a lot more to come with this stock, but I feel, and I'm pretty sure this is going to be the end of the downside move. We should see some type of move to the upside. And I'm not a financial advisor, no financial advice here, but I think the darkest days are pretty much at hand, and we should start coming out on the other side and work our way towards the all-time highs like we're supposed to over time. But the AMC plus ape chart for the time being is what we're using. I believe this is a terminal shakeout to finally get all the weak hands out and then start to really turn this thing around the way it's supposed to happen. So that's all I got for you as far as this is concerned. Keep your heads in the swivel. Be prepared for anything. Best of luck on the markets with this whole thing, but I'm going to keep you updated with as much information as I'm seeing on the charts. If you're not following me on Twitter, make sure you follow me there. Hit the like and subscribe button if you're not already subscribed to the channel. Join us on the way up. We're going to try to be here as many times as possible, pretty much each and every day, growing our portfolios together, making the outcome income for 2023 and beyond. Like, comment, subscribe. Let me know what questions you guys have on this thing. I'll be back in contact as soon as possible. And I'm going to catch you on the next video. Peace.